Hey traders, David Frost, My Strategic Forecast. You're here for another episode of Common Sense Market Analysis. Today is Tuesday, May 28, 2024. We're looking at a daily chart of the SPY or Spider, which is the proxy for the S&P 500. What do we have on that docket today? Well, by the end of the day, it turned out to be a relatively big/nothing burger. Market took a little dip in the early afternoon, had a rescue operation into the closing bell. Morning trading was very narrow in the live room, and we'll get to this a little bit later. We did have a nice long trade, pretty simple at the end of the day. It was what we call a good way to start the week. We'll get to that later. Let's take a big picture approach to the S&P. Let's make an assessment of where we are, what the likelihood of what happens next is. So all in all, if you just take out this reversal-ish candle, you'd say, hey, look, they're just eating time off the clock for about 9 days, coming into an on-time type of situation. That's item number one. Item number two is we do have a breakdown candle / reversal-ish candle. Now, keep in mind, the market has not been rejected or has not had follow-through from that reversal candle day. We're talking about this from last Thursday, the 23rd of May. Just above that high is our trend line. So we know a couple of things. A, if they get above the high of that candle, right above it is overhead resistance / unfinished business / our trend line. That's item number B. Another thing we know, if in fact they start closing daily, not just one time, but let's call it 2 times or more above the high of the breakdown candle from last Thursday, the high is the all-time high, 533.07. If they close above that candle high and stay above, that will be a further bullish signal for more upside momentum in this market. So we know that the breakdown candle high is our bogey. What does that mean further on? What that means is any trader, for example, that said, hey, look, I'm willing to take a short position in the market, but where am I wrong? Well, that's your spot. You're wrong above the high on close. One time could be a fake out. Start closing daily more than once above that candle high, and you have to call the trade wrong, lick your chops, and move on. Let's take a look at the last couple of big time or big-ish breakdown candles on the daily chart and what happened there. So we go back to this one from the 30th of April, and we say, well, we had a little bit of follow-through, and they snap back right away. Okay, fair enough. What else we got? Well, the next one back is a bigger breakdown candle than one we had the other day, and they did have follow through to the downside. The next one beyond that is the one from the 4th of April, around the same, maybe a touch bigger than the one from last Thursday, and they had very similar price action that they're having now. They shimmied up, bounced up for a couple, 3 days, and then they had what we call a collapse in the trading business. That was follow through after the breakdown candle. So far, we've had 2 of these days sideways to up / wedge-ish formation. We don't know what's going to happen next, but we're watching for what does happen tomorrow and beyond. Again, bullish above the high. If they start breaking down, guess what? There is unfinished business down below the low of that low from last Thursday. Inside the number members and live room members will certainly have those numbers on an as and if needed basis. What about the weekly chart? Do we see anything interesting on the weekly chart? From a visual perspective, it looks like they hit the trend line and looks like they just repelled off of it just a little bit. We also have an on-time type of situation on the weekly chart. They bounced off the 20-week moving average, went up towards the trend line, and now they're in an on-time type of situation on the weekly chart with what? You guessed it, a sign and or signal of a trend change. What do those look like? They're taught in the course, Lazy E-mini Trader. There are several of them, a small bucket full. We've got one of them on the chart from last week. When we look at some other charts, what's going on the 4-hour? We got the same wedge-ish formation that we have on the daily. You just got a couple of extra candles on the 4-hour chart riding the 20-period moving average. Give up the 20-period moving average on this chart, and that will be an hint/clue that they're headed lower. 3-hour chart. You got another breakdown candle, different from the daily chart. They've already ran a test in the high neighborhood, yet what they're doing is rather than getting rejected, you can see they're running sideways beneath that high of that candle. Wrong tool. This is a channel that could be a bullish channel building energy for another move higher. They're eating time off the clock. On a micro scale, they have run a test of the most recent breakup candle low in the sequence. That one right there. They did that in the first part of today. 2-hour chart shows much of the same thing. And what's interesting is on the 2-hour chart, they did and they have closed above a couple of times. But they did fail, but they haven't failed meaning new lows. They closed above a couple of times the high of this breakdown candle, and they're still eating time off the clock. Now, is that a hint that higher prices are on their way? In terms of the 2-hour chart from a moving average perspective, we're going to say that the 50-period moving average is our moving average guideline of sorts. Get below the 50-period moving average, opens a door down to this gap that has yet to be filled. And once they're down there, it is decision time whether or not they're going to bounce or continue lower to some lower unfinished business mentioned before will be provided for Inside the Number and Live Room members. Speaking of Inside the Numbers, pretty good segue. Let's go to the commentary for today. What I urge you to do is listen to the commentary, read the commentary, write down some notes, use your sticky notepad, pause the video, go back to the charts, and double check the work on the numbers, the commentary, and whether or not you think that you can be successful if you're an intraday trader using this information. Food for thought. We have some early rhetoric. Let's get down to the brass tacks from an intraday and shorter term perspective. Above 530.55 is the bull case for another pushback toward the highs. This is the early look. Right of the vertical is today's activity. Here's a 5-minute chart. 530.55 is the blue horizontal trend line. You can see here early in the morning, first candle right out of the chute. The high was 530.51. That counts for the margin of error within the give or take situation. It was, in fact, overhead resistance. What about some other stuff? We don't need the higher stuff. That was there just in case. The flip side situation is for Mrs. Market to drop a little and get below 527.90, which opens the door for another leg lower, 527.90. They did get below intraday, but they had a rescue operation in the afternoon. And what traders in the live room will notice and remember, let's just stretch this out a little bit. Again, this horizontal line, right of it is today's activity. And what traders in the live room will notice, and what we've taught in here many, many times, is this candle here, the low, is 526.88. That is the gateway into no man's land. Also to go fill the gap down below that also on this hourly chart coincides with a 100-period moving average, the purple line. This low also represents something we discuss in the live room all the time, which is a bull-bear battle place. Sometimes they come up short, other times they spike them through. So the next place below my number of 527.90 was this bull-bear battle place, which they came up short, had a bounce back in the other direction. Once they recover over 527.90 and stick, that would be the bull case for a snapback situation. That's what traders in the live room hear me say over and over again. These are the things we learn. Even though this activity happened in the afternoon, you could hear me saying that in the morning session. What would be the zone below 527.90, the next number for a bounce back? I would have done this had we been here in real time, and this would be it. This place right here, which is the bull-bear battle place, and you could see what happened. They came close to it, ripped it back up in the other direction. All charts act and react the same way. The market does the same routine over and over and over again. No magic soup. Let's see what else we have as the day starts to get underway. So 9:05, we're going with the morning early schematic. What's the scoop? I'm laying out the whole thing. We had a bull case if they were to rise, and then we had the flip side case if they weren't. So I was prepared to short the market up here, 531.25 to 531.80. They didn't do that, so we have to go to the flip side situation, which is what if they have a morning shakeout operation? All right, well, we've got 529.10 down to 527.90. Let's see what happened there. We're back to a 5-minute chart. Still right of the vertical is today's activity. What are we looking at? We're looking at that. That was your morning trade. Not tremendous, but they gave us the trade with what we call in the trading parlance, no heat. Weren't out of the money by a few pennies. Gave us about 10 points, give or take. Nice trade to start the week in a quiet tape. At the end of the day, the market didn't go anywhere. Little up, little down, provided the morning trade. Who got that? Traders inside the numbers, traders in the live room. Anybody that wanted it was afforded the trade. That was provided 25 minutes before the market was opened for business. Pause the video, read the notes, go back to the chart, and double check the work. You can see here 9:57 and getting close to the zone, 527.10. That was 529.10. That's a typo. Is for the bounce back in the other direction. They did the thing. You can see 10:03. There's your base hit from the top end of the zone. The rest is trader's choice. Holding a trailer is fine. 530 is natural overhead resistance. 530 is natural overhead resistance. That's where this arrow is pointing. Entry at 529.10. 530 is natural overhead resistance. What happened? It was natural overhead resistance. Funny how that works. Pause the video, read the notes, go back to the chart, and double check the work. It's all in here for your viewing pleasure. The morning trade, the schematic, managing through the morning business. The question you have to ask yourself is, without this, do I have the numbers? Can I make the trades without the numbers? You answer that. We had a couple of stocks on the move today. We had DraftKings and AY. AY was a dud, didn't do anything. DraftKings hit its entry objective, so let's take a look at the chart. There were the numbers today in DraftKings. Came into the first, bounced it below the second, back toward the first, meandered around. No harm, no foul. It was kind of a dud / situation for DraftKings. They never really gave you any kind of rocket ride whatsoever. They found support in the zone they were supposed to find support in. Pretty much what happened. What's going on over in Camp IWM? Well, this is my favorite market leading indicator. They were down 28 cents today. Little bit down earlier. However, at the end of the day, down 28 cents isn't a federal case out of anything. So what we're going to say is big picture perspective. We have a big breakdown candle from last Thursday. We're riding that candle. If they get above the high of that candle, we're going to look toward the unfinished business at 210 and or higher. This candle high at 207.62 is our bogey. Stay below, she's bearish. Get above, she's bullish. And that's the way we're going to look at it for the next couple of days in Camp IWM. Weekly chart could be a lower high, could be eating time off the clock. We'll revert to what's the trend. Above all the moving averages, trend is your friend. We'll leave it at that. Same goes for the daily chart. We just have another item, which is a breakdown candle high, gives us another gauge, another clue, piece of evidence, if you will. What about the folks down at the transportation department? Another down day, about 0.6%, down 87 points. Canary in the coal mine-ish. Something different is going on with the transports. We've been talking about it for a week and a half already. S&P's flirting around the highs, Dow, NASDAQ, all that stuff. Yet the transports have been melting away. They are below all the moving averages on a daily chart and below half the moving averages, 2 out of 4 on a weekly chart. This is not a bullish tape, but this is a tape that is faltering Is this going to pull down the rest of the market into some kind of corrective formation, or will they have a rescue operation with the transports? I am watching the transports closely each and every day. They are in trouble unless they get a rescue soon. We're going to expect the rest of the market to take a cue from the canary in the coal mine or Team Transports or Buttigieg's crew. This is what I was just talking about. You see anything like that in the cues? Absolutely not. This is called a divergence. Here's the daily chart. We have last Thursday's breakdown candle above that, and there's no limitation. There's no cap. There's no ceiling. We don't know how high she can go while at new highs below this breakdown candle high, and she can find overhead resistance up there until closing daily above. And yes, 449.34, what's that? She will be back to pay a visit. That is the most recent breakout area. Kind of did it once when she peeked her head above over here, but still yet will come back to pay a visit. The only question is, from where? What about the XLF? The financials are faltering a little bit. Another canary-ish situation. If there's trouble in the financials, there could be trouble and foretelling of trouble underneath the hood of the rest of the market. XLF was down over 1% today. We're going to take heed on that. We're going to put it as a puzzle piece. It's on the table. They are inside the most recent breakout area from here. That's why this line is there. So we take it off and you say, well, the S&P's been going sideways. They're melting up. The Qs are melting up. But the financials are not melting up. The financials are pulling back. Are they going to put in a higher low here, or is something else developing? Watching the financials and Team Transports very closely, and we'll just leave it at, over the next few days, we'll just say this week will be a telltale sign. On the other hand, we have Smashmouth, which had a very good day, up $5.50, over 2%. NVIDIA, which is Mrs. Monster / Mr. Monster stock, just ramping up. Let's take a look at NVIDIA. This is a big part of why SMH was up so much. NVIDIA was up $74 today, up $1,139. Just a few days ago, it was at $930 something. It's a monster. It will find another top. It will pull back. The question is from where? 1,200, 1,250, 1,150, any one of those places, or literally any place is where that can occur. I'm not going to pretend to know, not going to make a guess on how high NVIDIA can go. If you're long NVIDIA, and we have some participation on the long side from our momentum traders in the live room, what I tell them is you ride it until she throws you off. If this is a trailing position, it's risk-free, emotionless, and you have no idea how high they can take it. If I told you how much I appreciate each and every one of you, without you, these videos are not possible. That is true and accurate information. We're pulling the ripcord here today. I'm David Frost, My Strategic Forecast. Thanks again for tuning in to another episode of Common Sense Market Analysis.